South African specialist bank Investec says its first half earnings are likely to be similar to the numbers it reported a year ago. Lower investment and trading income are expected to have cut earnings in the United Kingdom, but Investec's South African business has improved in local currency terms. The Australian business has returned to profitability. The company's CEO, Stephen Koseff, joins us for more. Welcome, Stephen.
Thanks, Erica.
And I have to tell viewers that you insisted that we say it's a specialist bank, not an investment bank. Those were the days you've moved ahead.
Specialist bank and asset manager.
Ah, indeed. So
half our earnings last year came from asset management and wealth management.
And I think that's an important point. It's diversified, many moving parts in the business, and yet still the exposure to Europe, which has bombed out. Australia has been difficult. So for now, South Africa is the good news.
Yeah, South Africa is, our South African business is a strong franchise, well established. We had some large bad debts a few years back, but that's working itself out the system. Bad debts are still probably a bit elevated because the economy is not as strong as people think, but we have fixed all that up. Our UK and Irish businesses obviously are exposed to what's going on in Europe. The banking side of those businesses are in the process of being reshaped. The crisis has had a big impact on banking per se. You look at major global banks, they still make losses, they're still writing off stuff from the crisis, they're getting fined for poor behavior. There are all sorts of things happening in the banking world, and one has to adjust to that.
It's a hostile environment, and it has been for many years now. Talking about adjustments, since 2008, within the business, have you seen a change in culture, change in the way you do business?
I think one of our strengths is our culture, and I think that one of my colleagues who's on our board, who used to work for us, said to me the other day, Stephen, you've got to think about where you are in London. You haven't been fined for liable fixing, you're not fined for mis-selling insurance, you're not fined for mis-selling derivatives. You guys are one of the only clean banks in town from that perspective. So, we've always believed we've had a good culture. We've always believed we have a firm that looks after our client and haven't done some of the crazy things that are happening out there. I think culture, for the first time, you're starting to hear people, well, what's important is culture and values, which if you go look at Investec's history, that's what we've spoken about our whole history. And that's something that we've always worked very hard on as a firm.
Mark?
I'm just wondering, actually, Stephen, whether the market gives you credit for what has been a really up and down 5 years or so. It's been a tough crisis. And I was looking at your full year results. What struck me was that wealth and asset management, which was 20–25% a few years ago, has in fact doubled. So if we go through the longer sweep of things, you've actually thought ahead, but perhaps you're not getting the rating that actually justifies that. Yeah,
I think that, we still, UK shareholders who don't want to touch banks. Banks who, and maybe they're just starting to nibble because they think that, life is moving on, and then you've got this Europe thing bouncing in your face, every 2 weeks. This week it looks great because Draghi's back there. The German Parliament backed the Stability Fund, and life looks okay. And then next week some other fellow will say something, and boom, you're back in it. So it's stop, start, and that's what. And so you've got a whole shareholder universe who are waiting for, the banking sector to bottom out, and then they'll come in. What we're seeing internationally is hedge funds buying distressed portfolios, hedge funds getting active in the credit markets, and I think that is a sign that life is turning. I was in Ireland last week on Thursday, visiting our office there, and I got a dissertation from my taxi driver from the airport who gave me the same speech as our economist. Said, this recession is partially selective. If you had a job and you didn't have a big mortgage, you were fine. But obviously that was a place where you had a massive bubble. But you can also feel that activity levels are starting to pick up, and things are starting to move on in life. So we think that what you're saying is how we feel, that we don't get credit. We looked at in South Africa. If I was standing and reporting in Rand, I would have said, our earnings are up nicely. But I'm reporting in sterling. The Rand has depreciated 15% against sterling. And so we've got, we're swimming upstream. Whereas our South African peers who we compare against are reporting in a totally different currency. They reinvest their capital at, okay, now it's only 5%, but there it's half or naught. And it's a very different situation. Yes, we made mistakes, but we navigate. We're one of the few firms who navigated through a crisis unscathed. without help from anyone, and we get cross sometimes, and I don't like to shout. I shout a lot because I wear my emotions a little bit on my sleeve. But when you try and explain this to people, they sit here in Cape Town or wherever they sit and are isolated from what is going on in that world, even though some of them work for firms that had to get massive injection from government. So I think we would endorse what you're saying, but obviously we've got to. The market's still shouting, and ROE, and why did you go to London? We've been there for 20 years. Why did you go to Australia? We've been there for 15 years. Why did you go to Ireland? We've been there for 15 years. The good neighbourhood became the bad neighbourhood.
Just moving away from that, I think before you came on, we were talking about the mood in the economy and the need to create confidence. What's your reading of your clients, the people that you would lend money to, or those that are probably depositing? How do you see the mood both here and offshore?
I think that private individuals in South Africa were starting to get confident and started to spend. Corporates are still sitting on their hands because you've got all this talk about nationalisation and things that international people get terrified of. So the mood was getting quite good in South Africa. And you've seen that the banks that have big exposure to consumer lending and that have done pretty well. But now, the last few weeks with this thing in Longman being on the TV around the world, people are starting to rethink and say, whoa, what's going on now? I better hold back. I better not commit myself. And that's the danger when you have, poor relations between government, business, and labour. And the countries that have been successful, and Brazil's a good example, Brazil was a basket case in 1998, now it's a rising star. Good relationships between government, business and labour. They work as a team. Team Brazil. Not one running down that road, the other running down that road, and the guys in the middle just looking at this and say, what the hell do I do?
Just on a question, because we've been trying to argue this. Watching the markets, and I'm talking about the stock market, the bond market, we haven't seen much selling.
You're looking at the market in rand.
Yes.
And you're not looking at the market in dollars.
Okay.
If you're looking at the market in dollars, the SA market over the last while, or in sterling or in any other currency, you would have recognized that the weakness of the rand has to be someone selling. Maybe at the margin, maybe people are hedging the currency and keeping the stock.
That's what we're asking, yeah.
I don't know, but obviously the rand has taken a bath.
Yeah.
So they're selling something. They're saying, okay, I'll cover my exposure to South Africa by shorting the rand. The rand is a highly liquid currency, and someone will go and short it. And so that's maybe what we've been seeing, but I'll keep my exposure to the stock.
Okay.
Stephen, we've got a minute left, but I want to ask you, what does QE3 mean for you, for Investec?
I've just come from Europe, and I've seen liquidity build up in that part of the world, certainly in the countries that don't have a problem. Yes, the countries that have a problem, and no one will give them money. But if you take in the UK right now, there's a big build-up of liquidity. You talked about pushing on a piece of string. It's like we're in the liquidity trap now. QE2 maybe just increase that. I don't know. QE3, sorry. I remember Rabini say you'll get QE3 and you'll get QE4, where they'll target interest rates low for a long period of time. And that's the path we're on, and we are on that path. And now the question for me is, are we in Japan-like scenario, 24 years of, an economy not really going anywhere? Or are we going to recover like we normally do? I bet we will recover, because I think if Europe gets stable, you'll start getting some economic uplift. And I believe in Bernanke and those guys. I think they know what they're doing. And Bernanke studied the recession and the depression, and he really understands. But yeah, you worry that it pulls in. Guys have to start taking risk, and that's what QE3 is going to do. It's going to cause people to take risk, which the world needs to take. If we don't take risk, we won't create jobs, and this thing will go on for a long time.
Stephen, thank you. So you're still happy being in business in this world?
Yeah, it's life, business is an up and down road.